And welcome to the real estate edition of That Business Show 2.0. I'm your host, Jamie Maloney, where real estate becomes show business, with new episodes each Thursday, 9 a.m. Eastern Standard Time, thatbusinessnetwork.com. Today, we're going to be talking about crowdfunding with Alan Lewis, who is my guest. He is the Chief Investment Officer and co-founder of DiversyFund and has worked in the real estate industry for 15 years, including heading up a real estate private equity division where he oversaw Class A multifamily and working on Wall Street as both an investment banker and a corporate attorney serving real estate investment clients. So, Alan, welcome to the program today.
Hey, thanks, Jamie. Appreciate you having me on.
You know, crowdfunding is a term we're hearing more and more about in business, and I've talked about this on the program before. So before we get into it, for the people that aren't familiar with what crowdfunding is, give us the overview of what crowdfunding is.
Sure. The term gets tossed around quite a bit. There's some technical terms for crowdfunding, but essentially when we in the industry talk about crowdfunding, it means having a crowd of investors. So think of a group of investors spread across the country, from California to New York and all the states in between, who are basically coming together, pooling their money in order to fund a particular transaction, be it real estate, or we've all seen the startup companies that had crowdfunding like Kickstarter. So basically a crowd of investors pooling their capital together to make some sort of investment or transaction happen.
Now, why are we hearing about this more and more? There was a recent change that allowed the average person to participate in crowdfunding. What's the history of this?
Sure. Yeah, it all stems back to the Jobs Act, and there's some different parts of it. There's Title II, which is what most of our deals fall under, which allows people for the first time to advertise potential transactions. So before that, you had to have a prior relationship with someone. You couldn't just advertise saying, "Hey, we're raising money for this project or this transaction." So now we can do that as long as those investors at the end of the day are all accredited. It's the new 506C exemption for the securities laws. The new thing that everyone's hearing about is the new Title III, which is crowdfunding, where startup companies can raise up to $1 million. So definitely has a big limit on it. And there are some limitations as to how much an investor can put in based on their net worth or income. And so that's the new thing that just came online, became active about a year ago. And so that's been the big buzz in the news. The older 506C has been around for a couple of years.
So what is DiversyFund? What are you investing in?
So we are an online crowdfunding platform. And what we've done is we invest in real estate. We looked at the market, and what we saw is as crowdfunding sites started popping up, there was this huge demand for real estate, right? Because if someone's going to invest, they want to have, it's beneficial to have a hard asset, backing your dollars, right, instead of just investing in a startup company and rolling the dice at the end of the day. So what we looked at is all the competitors out there were functioning as a broker, right? They were matching investors to various third-party real estate developers and real estate sponsors. And we had some problems with that model because you have no quality control, right? I mean, you're gonna have some great sponsors, you're gonna have some not so great sponsors, and you're not gonna know the difference until it's too late and investor capital is at risk. So, with my career having come from, real estate development background, and my partner having done real estate development for his 20-year career, we said, hey, let's just do something totally different. Let's go vertically integrated, where all the offerings that we put on our platform that our investors can look at, we're the developer on all those. So we have this quality control. We have a general contractor construction management team license that's on board in-house. And it's just been a huge switch in business model that makes it better for our investors at the end of the day.
Okay, so you're the developer behind all the projects that are in the fund. So you're not buying third-party assets and putting them into the fund or becoming involved in those?
That's right, exactly. And so it's better for both sides, right? I mean, we have, if I'm doing a project, it's here in my backyard in San Diego, we can visit it on a weekly or monthly basis. And the minute it's off schedule or over budget, we know, and we can jump in and fix it rather than relying on someone else to, hopefully tell you that something's not working out.
What type of assets are you developing right now? Are you commercial assets? Are you doing residential, single family homes? What's doing well in California where you're investing?
Sure. We have two main product lines that we like right now. We're always looking at market metrics to see where the trends are heading, what's happening with sales prices and rental rates and vacancy. So right now we have single family residential products that we're building. We're doing, these high-end homes in places like Coronado and La Jolla. And there's just such a healthy profit margin on those that's worked out really well for investors. Excuse me.
So what keeps values, so high out in California? We all know about Silicon Valley and the tech industry out there. Is that still what's keeping values, so high out in California?
Yeah, a lot of it's just, if you come and visit, you see that the weather, you can't beat it. So
Right.
it's just people want to live here. And so we always have population growth and job growth. Down in San Diego, we're benefiting from a lot of, venture capital, type startups starting to look for a cheaper place to live that's still in a desirable location for young professionals.
California, a very expensive market, but a very desirable one, no doubt. I was in San Diego a couple of years ago, and I think the starting price for a home is like $500,000. I mean, I'm in Tampa, major metro, and you can still get a starting home for $100,000. It amazes me the differences in prices across the metros. I guess it comes down to the weather out there. I mean, we got heat, but we got that humidity. You don't got that humidity out there.
Yeah, we don't have the humidity, which is nice. And yeah, it's just such an appealing place to live that people have really been steadily coming here.
Tell me how this differs from like an electronic real estate investment trust, an REIT, for instance, and also how would one who wants to invest be able to invest? Do they have to be an accredited investor, as we know that term?
Sure. Yeah, for our platform right now, all of our investments are targeted for accredited investors. Our minimum investment is as low as $10,000, trying to make it very easy for someone to get started. The E-REITs, the electronic real estate investment trusts that we're seeing out there, are similar to what we do with our passive income fund. What that means is that you're basically creating a fund, and that fund invests over a large number of real estate assets. So you have the benefit of diversification. So if one particular project doesn't work out, instead of just being, in dire straits with your capital, you have this pool of investments to kind of spread that risk out. And so it's a very easy way for especially new investors into the real estate space to get started. Our passive income fund, similar to a REIT, distributes out each quarter all of the income and interest it earns. So we've been basically hitting about a 11.4% average return net to investors since we started that fund about 4 years ago. So very established track record. And people basically just put their money in, and each quarter they get a check, and then after their initial 2 years, they can pull their money out whenever they want.
How has real estate been performing in California? In Florida, for instance, we had a great run up until 2006, and we had that terrible crash. We lost about 50% in value across the board between 2006 and 2008. And really, we didn't start to recover until 2012. And we've probably picked up about 30% of that lost value back, on average. How has the California real estate market performed? And that's the residential market.
Sure. Yeah. In the residential, I mean, we didn't take quite as deep of a crash as you saw like in Vegas and Florida, Miami, where you had a lot more speculation. Pricing, is pretty much on par with, has fully recovered. Right now, we have great year-over-year price increase. I think it's anywhere from 6 to 10%, depending on the price point tier. But even then, if you look at the sales volume, I was just pulling up these statistics. In fact, back at the peak in 2004, your monthly sales volume down in San Diego, where we're at, was about 76,000 homes trading per month. And then the low point back in 2008 was 19,000. So it drops from 76,000 down to 19,000 per month. And right now we're currently at about 46,000. So somewhere in the middle. So we're still not even hitting the same volume, which is good because we don't have as much speculation going on, but pricing is pretty much recovered.
Hold that point there. I got to take a quick break. Currently talking to Alan Lewis, Chief Investment Officer with DiversyFund, using crowdfunding then to get you into the real estate business with a professional group that understands how to invest in the real estate market. Learn more at DiversyFund.com. We got more with him when we come back from the break on That Business Show 2.0, the real estate edition with Jamie Maloney, where business becomes show business.
Hi, welcome to Yeager's. We just want to take a minute and show you what we're all about. At Yeager's, our primary business is hardwood flooring, although we are remodelers for kitchen, bath, and general construction. We operate a fleet of shop-at-home vans that have all the flooring-type products, hardwood flooring, laminate flooring, tiles, stone, what have you. So we're able to come out first with products in our vehicles and take a look at the setting, how the colors will work, and then to be able to come up with some options and ideas for you. If that's not good enough, we have a large distribution center that we inventory product and have a nice display area.
We're back to That Business Show 2.0, the real estate edition, where real estate becomes show business, with new episodes each Thursday morning, 9 a.m. Eastern Standard Time, thatbusinessnetwork.com. Today, my guest is Alan Lewis, Chief Investment Officer with DiversyFund, where they're using crowdfunding to invest in real estate assets. So if you're an accredited investor, want to get into the real estate business, a nice tangible product that protects your investment, visit DiversyFund.com for more information. So Alan, how is like the residential market and commercial market, are they connected? When one goes up, one goes down, when they both go down, they both go down? What I'm kind of getting at here is, how is exposure, or how is my money, at risk when I'm investing, in just real estate assets in California?
Sure. Yeah. I mean, in general, if you have, appreciation or softening in the real estate market, it washes over most asset classes. However, different product types within real estate, are affected differently. So, for example, when we had, a big crash in '08 with residential, multifamily actually wasn't hit as hard, right? Because you have a lot of people getting foreclosed, and so now they become renters. And we're also seeing this perpetual renter mentality among the millennials who just are jaded on the home buying story, and they don't want to be tied down to a mortgage and like to be able to pick up and leave if they want, on a yearly basis. And so multifamily, surprisingly, didn't have as many foreclosures as the residential side. So that's why it's always good to try to diversify yourself, over a couple different product types within the real estate asset class itself.
How is the profit margin on rentals? In 2012 in Tampa Bay market, we were sitting on, record low values and record high rents. And we had this surge of investment groups that came into our market, the hedge funds, the Blackstones, Progress Residential, which was Frio, Florida, which is a Goldman Sachs-based fund. They descended on our market and they gobbled up every short sale in sight. And really that's what's led to, in our market today, a very low inventory supply, because this stuff is tied up in rental housing, which would normally be coming on and off the market through normal, life events like divorce and job change. we're having a hard time finding anything to sell to anybody right now because of this. Did you have a similar experience out in California, or, and just what is the rental market like out there in terms of profitability?
Sure. Yeah. I mean, we didn't, because we had less, I mean, there certainly was speculation here in Southern California, but because it wasn't as extreme as in your neck of the woods, we didn't have, quite that opportunity. But yeah, 2010, 2011, there certainly were a lot of institutions sniffing around, gobbling up assets, for really attractive cap rates. Now what we're seeing is, especially in San Diego, in our backyard, where we also do multifamily investments in addition to our single family product. And so we have a couple of factors that we're really excited about. First of all, rent increase is right about 8% year over year, which is very high. And we like that. And vacancies are down to, 3 to 2%, depending on who you're talking to. And the thing that's driving that, if you go around and drive around some of the neighborhoods, you will see a ton of multifamily construction. So your initial reaction is, okay, it's getting overbuilt, overheated. But when you go, we're big data guys. So when you go to the data behind it, the economic forecasters are showing this huge 30,000 to 50,000 undersupply deficit of multifamily apartment units that the city needs based on population and job growth. And we're only putting about 5,000 units online per year. So a huge delta between 30,000 undersupply and 5,000 units, which that's going to keep, the rental increase and the vacancy rates, where they are. They may level off a little bit, but I think we'll still have a very attractive outlook for multifamily here.
One of the things I loved about San Diego was the downtown, the gas lamp district, and the Petco Park that's down there. And to what degree does the downtown, a vibrant city life drive the surrounding communities? Because I ask that because downtown Tampa is a doldrum of a development. We've got some stuff on the horizon, with a new developer in Tampa that's really supposed to bring back, the nightlife and the pizzazz of the area. But to what degree does a solid, fun downtown help to prop up real estate values?
Sure. What you're referring to that's become a big driver behind making rental, in downtown areas attractive is what we call walkability, right? People increasingly, are active, and they like the fact that they can go from their front door of their apartment building to their dry cleaner, their deli, a good grocery store like Whole Foods, and restaurants and trendy bars, and have all that within just a few blocks. And so for downtowns that have been forward thinking and have, zoned and done entitlements correctly to allow for that, they're really seeing that come to play. San Diego's done a great job in being forward thinking in a lot of these areas. The gas lamp in particular actually, is more catered towards convention visitors that come and stay in the hotels in that area. So local residents tend to avoid the gas lamp. That's kind of like Times Square in Manhattan, where I used to live. But yeah, it's certainly that walkability is a huge factor.
It's the live, work, and play mentality. And right now, downtown Tampa shuts down at like 5 or 6 o'clock in the evening. There is no nightlife in downtown Tampa. But we've got an investor, Jeff Vinnick is his name, and we got this district called the Channelside District, which is supposed to be a very vibrant area, which has done poor over the last 10 or actually 20 years or more that it's been in existence. He's wiping it all out. It's waterfront community. He's building this brand new development. So everybody's all about downtown Tampa right now. So we're very excited about what's coming to the area. But one thing that we're also very excited about is the potential to get the Tampa Bay Rays Stadium over to downtown. And you all have Petco Park downtown. When that came downtown, was there a notable increase in activity downtown?
Yeah, certainly. I mean, you get a lot of folks coming in from the surrounding, suburbs for those games, and so then you have an uptick in retail, for the area surrounding the park. Of course, the local residents aren't too happy with the parking and the crowding that comes in, but it's just a great luxury to have a ballpark just a few blocks away that you can go visit. Especially if you're a baseball fan.
How do you see your fund, DiversyFund, expanding, or do you plan to stay within the California market? Do you have plans to enter other real estate markets and develop this crowdfunding platform?
Sure. Since we're the developer on all of our projects, we prefer to do deals that we're in markets where we understand, the trends and what's driving the growth and other factors. So California is an easy one for us because it's right here for in our backyard. But that said, we're certainly looking right now at other markets. I spent some time in Salt Lake City area where I headed up real estate private equity division, and a lot of similar attractive market metrics there. So we're looking at other areas where, we really like, what the market's doing.
And how are you attracting investors to your fund? How do you reach those people?
Sure. Yeah. I mean, we do a lot of digital advertising, on Google, Bing, Facebook, social media. A big thing for us is just educating people. The average investor is doing what my parents and my grandparents did, which is put all their money in the stock market, stocks and bonds, because that's what they've been told to do. And so they don't even realize that their investment portfolio is missing real estate, private real estate. And so we have to educate people and help them understand, like, a good 20 to 30% of your portfolio should be in alternative assets, which just means basically any asset class that is an alternative to investing in stocks. Of course, the biggest one is real estate. So as we go through that process, it takes a few touches, through advertising for people to finally get that message, like, oh, I need to start moving some of my money out of stocks and into real estate to be better.
I was coached, as a youngster, buy a home as soon as you can, buy as much real estate as you can by my father, because that's the road to wealth. And then we had this financial crisis that hit in, the mid 2000s. And so the millennials have a different viewpoint because of what they've seen happen to their parents and grandparents. Do you find it's a different discussion when you're talking to millennials about, the value of investing in real estate versus the baby boomers and people that have seen such good years in real estate?
Absolutely. Yeah. The baby boomers, I mean, they understand, we had a nasty downturn, but they've also seen, through several cycles, they've seen the wealth that's been generated through real estate and see that it's a great place to put some of your, allocate some of your portfolio. With millennials in general, we're seeing kind of two different groups. We're seeing those who are reading the Rich Dad, Poor Dad, Robert Kiyosaki books, and understand that real estate, is a key driver for wealth generation. We have a lot of millennials who it's just, saving for retirement isn't on the radar. It's the Instagram generation. They're just big on experiences. They're not buying assets. They don't necessarily want, the shiny car and the house. They just want these experiences. And, at the end of the day, we're trying to help them see how, if you like, being able to travel and having this freedom, starting to invest in an early age certainly will help you to maintain that ability and increase your ability to do what you want and have that financial freedom.
But on the flip side, you're reaching the millennials because you're the developer, you're building, these multifamily rental, this housing to attract the millennials who are all about the experience. And so now on the flip side, you're catering to them, at least as a product provider. How are you developing your products, or are you developing your products to reach the millennials?
Sure. Yeah, I think a big part of that is, our real estate assets are the same regardless of, who our investors are. But a big part of that goes back to, educating through our marketing process. And so, when we have people, they come to our website, they sign up for a free account, and then they can start talking to our investment analysts on the phone to go through questions they have just about, asset in particular. But a lot of folks, start with basic questions of, tell me how real estate investing even works. And so we spend a lot of time with basic concepts that you're familiar with, like passive income. What does that mean? I mean, some people just have to figure out for the first time that you invest in real estate that's throwing off cash flow, and then they collect, a quarterly payment. That's new to a lot of people.
You've been involved in investing in real estate and business for some time now. Crowdfunding, a fairly new concept in business. How has it, enabled you to grow as a business? What has crowdfunding done for you as a fund?
Crowdfunding it's been a complete game changer, right? I mean, we are at the forefront of this industry that is innovating two things. One, the way capital is raised, the financial industry, and two, the way that real estate development is getting done. And so in the past, I mean, unless you knew, some broker on Wall Street and had enough money to get his attention, right, $2 million, or were best friends with the real estate developer, people just didn't have access to these kind of vetted institutional quality private real estate deals. And so with crowdfunding, what we've done is we've changed the whole space and give, someone in Ohio that would never have an opportunity otherwise, we give them access. And so we talk about democratizing access to these wealth generating opportunities, and it's really what we're doing. And so, as a company is something we're very proud of, right? To be part of changing and uprooting an entire industry and system and doing it in a way that spreads, the way people can generate wealth and who can generate wealth. Now it's open to everyone.
I'm thinking of the analogy, then crowdfunding is to the average investor what podcasting is versus the media. Podcasting is giving a voice to so many average people who have built up tremendous audiences, and it's kind of the thorn in the side of traditional media out there, which doesn't give a voice to a lot of the average ordinary people. Crowdfunding in your business is giving a chance for the average person with just average money to get involved in investments that otherwise would be held off for the multimillionaires up on Wall Street. Is that a good association?
Yeah, and to the same point, you talk about being a thorn in the side of an established industry. With our income fund that's been around for a while, we've put on the website for the first time and let new investors come in. And what we did is our marketing. We talked about declaring war on fees, declaring war on the asset management fee, the performance fee that these Wall Street funds typically charge, and we can do that because we make our money on the development side. So it's very easy for us to completely eliminate fees. So the investor, if the fund's making 11%, then the investor keeps 11%. And so that certainly has people in the established financial industry not happy that fees are going away. They like their fee checks. But that's the whole, that's what happens with industry innovation. And when you vertically integrate, you have that savings, and so you can pass it along to the consumer, which in our case is our investors.
Is there a minimum investment to get involved with the DiversyFund?
Yeah, we'll go as low as $5,000. It depends on the particular project. The ones on our website right now are all $10,000. So the big one that people start with is our income fund. It's the easiest one. They just they have a 4-year track record and just park their money and collect their quarterly payment checks. We're averaging about 10.1% based on our last quarter payment. So it's a great place to start. So
if somebody wants to put some money in DiversyFund, how would they get started? What would you advise them to do?
They just go to the website, DiversyFund.com, and so they sign up for a free account, look at what we have there, and then if they want to call in and talk to one of our analysts, we're happy to answer any questions. And then the process is completely online, fully automated. You sign your docs online and ACH your capital in, and then just collect the checks.
All right. Sounds good. A great discussion. Alan Lewis, co-founder and chief investment officer of the DiversyFund. Thank you so much for being with me on this edition of the Real Estate Show.
My pleasure, Jamie.
DiversyFund.com for more information. Stay tuned. We'll be back in a moment. the real estate edition of That Business Show 2.0, where real estate becomes show business. In that last segment, they're talking with Alan Lewis about crowdfunding, a great way to raise capital in real estate, but really anything related to business can be associated with this new way to get involved in asset funding, and this is crowdfunding. And so I want to talk about that, just kind of a general standpoint on this segment. I became introduced to crowdfunding firsthand last year when my friend Chris Krimitsos, a podcaster, an authority in the subject, decided to make a documentary called The Messengers, and he used crowdfunding to raise capital for the film, which was going to take upwards of $60,000-$70,000 or more to fund. And so the average person not having that needs to go to their sphere, their community, and hopefully even beyond their own personal community to raise funds. And so that's where crowdfunding comes in. He was able to raise just over $20,000 in about a 40-day period to use for funding the messengers, or at least contributing to the funding of the messengers. And so there's a variety of different crowdfunding platforms that are out there for use. There's Kickstarter, there's Indiegogo.com, GoFundMe, a number of different places that are used, and what are some of the differences in them. For instance, like Kickstarter, I think that was like one of the first crowdfunding platforms to really catch notice of the general public, and that's more for the arts out there, films and books and products associated with with an artistic type of a nature, and that's what Kickstarter is centered around. And you set a goal for what you are looking to get, and you've got to hit your goal, or else the funds go back to the particular investors, whether it's your friends or it's people you don't even know. That's the idea behind Kickstarter. Indiegogo gives you the opportunity to keep your funds even if you do not hit your goal, and you keep you pay a 10 or 11% fee. There's a couple different programs available. I don't want to go into how the different programs work, but Indiegogo allows you to keep the funds even if you do not hit your goal. And so there are a variety of different models that are out there. So Indiegogo.com is also open to a variety of different projects and ideas and services, whether it is an art project, a film project, or something that you want to produce, or a service that you want to create. Indiegogo.com can help you out with that. You see a lot of people using GoFundMe for like medical bills and emergency services or damages with a house. All of this is again centered around that Jobs Act that came out a few years back, which opened up crowdfunding to the general public. Before that, it was more institutional based. The average person couldn't commit their own money to these projects unless they were accredited, and so it's given the average person an opportunity to get involved in investments that would otherwise only be opened to the upper elite through Wall Street brokers and investment bankers. I myself am planning a crowdfunding campaign for this program right here. Just completed the design for the shirts and the groups, and all that's going to be part of our crowdfunding campaign. So I'll be able to give you my own personal experience with this here within the next couple of months, but be looking out for that. There'll be a lot of promotion and events around that, but just used 99 designs to design a new shirt, which will go as part of the campaign, and I'll be releasing that here very soon. But in short, you'll be getting access, you'll be getting, becoming part of those guys or those gals. And so it's centered around the name of the show, which is That Business Show. So you think of I am that guy or don't be that guy. Well, we want to build a community around being that guy or being that gal. So we've had some t-shirts designed that says I am one of those guys, and I am one of those, and/or I am one of those gals, or I should say, or not and/or, I am one of those gals. And so we'll put that out on the crowdfunding campaign for the program, and we hope that you will offer support to the program to help it to grow and help it continue on air. The program being about 4 years old, starting here in about a week. Went on air for the first time in September of 2013. I think it was the 13th was the first program of the Jamie Maloney Real Estate Show, which aired on Tampa Bay's 1250 WHNZ on Thursdays at 5 o'clock, and that morphed into a show at Mondays at noon when I was moved over to that time spot. And that went on for a year and a half until the launch of this show, which is a derivative of that program, because in that program I was interviewing real estate related professionals about the basics of their job and how it pertained to my business in real estate. But in February 2015, that business show was launched on 1250 WHNZ and ran for 2 years on local AM radio, as well as a podcast on iTunes. As I began to learn more and more about podcasting and the benefits of it and how it differed from radio, then I rolled the program into an online space beginning in March of 2017, and hence that's where that business show, the 2.0, came from. The real estate edition coming back as a to help promote my own business in real estate. I didn't really focus too much on real estate on the radio show. It was strictly that business show, and had different professionals from whatever industry without a regular real estate show. But I kind of lost track or lost touch with a lot of the community, and I got kind of branded as just a radio show host, even though I still did well and still good in real estate. It's important that people know what my core business is. My core business still is real estate, and I kind of let that go for 2 years. But that's why I do this podcast now, That Business Show 2.0, the real estate edition, to talk about the different real estate related topics and let you know that I can help you buying or selling real estate anywhere in the country with a center on Tampa Bay. Again, outside of the area in the United States, we help you through our vast relocation and our referral network. And again, if you're in Tampa Bay, I can help you specifically. 10 years of a real estate experience, actually about 11 years now of real estate experience, and over 2,000 different homes sold. So consider me again your resource, and this podcast as a resource of real estate information. I'm just full of different knowledge from all the different real estate deals and transactions that I have been involved in, and I've been involved in thousands more through partnerships with top producing agents. With a specificity on foreclosed properties on REOs, of which we talk about on this program a number of times. Now, starting here, and then the next few weeks, you're going to hear more topics on commercial real estate. That's where my business is heading. I am about to relocate offices, still within Coldwell Banker, but move to a different office in Pinellas County, which is our western county. The Bel Air Bluffs office, and begin training with a very seasoned commercial professional, the top commercial real estate agent in the Tampa Bay market with Coldwell Banker, John Skitchewicz, of which I will have on the program here very soon. But very excited to begin a new direction in the real estate business. The foreclosure business has treated me very well over the last 10 years and still treats me well, although it's not producing at the rate it used to, which is a good thing for the overall economy. It shows that the economy has been growing, that people are not in distressed situations to the degree that they were several years ago. Foreclosures, again, making up about 1% of the market in Tampa Bay, and the short sales are making up about 3 or 4% of the market. So again, not a lot of inventory out there to begin with only 1 month's supply of inventory. So very bullish on the opportunities happening in Tampa Bay with the development, like we talked about there in that first half of the program, the development that is going on in Tampa Bay with Jeff Vinnick coming into the city, purchasing the Channelside district. Is going to level that entire area and is going to build this nice new waterfront development. And we've already seen, some growth in downtown Tampa with the finishing of the Riverwalk, which goes from downtown Tampa up and through Seminole Heights. So it's beginning to give vibrance and life to the downtown community in Tampa Bay, which has struggled so much. And if we could just get the stadium in Tampa Bay, which in our market is actually in St. Petersburg, it would help the real estate values. It would help the overall community. And I really think that Tampa Bay, or the city of Tampa, would then to become much more of a broad metro. Tampa as a city is a small major city. It's nowhere near on the likes of a New York or Miami or a Chicago. but yet it has the potential. And so I'm very bullish on commercial investment opportunities. Also, the commercial real estate space is much less crowded than residential real estate, also much less regulated than residential real estate. A common misconception is that, the laws of residential, transfer over into the laws of commercial real estate. That's not true. One of the most basic differences is the idea of caveat emptor, the buyer beware. That is, in residential or in commercial real estate, that law governs commercial real estate. In residential real estate, that does not hold true. Sellers are expected to disclose everything they know about the asset that they are selling. But in commercial real estate, you could have knowledge of defects with the property, sinkhole, environmental issues, and still sell the asset on the market, and even have the broker have knowledge of it. They're under no law to have to disclose that to potential buyers. But in residential real estate, they're held to a lower standard versus commercial real estate, where the buyers are held to a higher standard themselves, and then do not have to disclose that to them. So some differences there. Also, commercial real estate agents are not bound by the Code of Ethics, something that realtors are bound by the National Association of Realtors. And for people that are not familiar with that designation, keep in mind, again, realtor is a designation. It's not a job title. You get a real estate license, you become a real estate agent or a real estate professional. Not until you join the National Association of Realtors and take the Code of Ethics training and agree to abide by its rules and laws, do you become a realtor. So I got to take a short break, but when we come back from the break, we'll close up with a little bit more about what it means to be a real estate agent and the direction of my business, and also share some tips with you also on making some good offers in real estate. You're listening to That Business Show 2.0, the Real Estate Edition. I'm Jamie Maloney, and we'll be back in a moment.
Hi, welcome to Yeagers. We just want to take a minute and show you what we're all about. At Yeagers, our primary business is hardwood flooring, although we are remodelers for kitchen, bath, and general construction. We operate a fleet of shop-at-home vans that have all the flooring type products: hardwood flooring, laminate flooring, tiles, stone, what have you. So we're able to come out first with products in our vehicles and take a look at the setting, how the colors will work, and then to be able to come up with some options and ideas for you. If that's not good enough, we have a large distribution center that we inventory product and have a nice display area.
And welcome back to the Real Estate Edition of That Business Show 2.0, where real estate becomes show business. New episodes again Thursday mornings, 9 a.m. Eastern Standard Time. thatbusinessnetwork.com. Also, keep in mind, we got a new site associated with this program. If you go to tampabayreo.com, that's the site that's centric on the foreclosures in the Tampa Bay community. So you can easily search for the available foreclosure inventory, albeit low, but still out there in the surrounding counties in Tampa Bay, of which I service 7 of them, including the Tampa Bay community, which is Hillsborough, Pinellas, and Pasco, and surrounding counties, which include Manatee, Sarasota, Polk, Hernando, and Sumter County. So again, tampabayreo.com for more information about the available inventory and also more about myself and the Real Estate Edition podcast of the program. All the videos are available on demand for just the Real Estate Edition of the program, both audio and video, which is then also available in full on iTunes and on our YouTube channel. So that last segment there is talking about, what it means to be a realtor, how that differs from a commercial real estate agent. Again, my business shifting into commercial real estate, so you'll see more and more topics on commercial real estate, and it's really a field that I think is open for people that are very connected in their community to the business community, something that this program has given to me. I started again 4 years ago, and to date have interviewed nearly probably 2,000 different professionals on this program, and so I'm very tied to the business community, with the majority of them being Tampa Bay based, because when I was on local AM radio, they were almost all local and came in studio each and every morning. It was not until I started doing That Business Show 2.0 that I began to expand to a broader market of guests. And now the people that come in via Zoom, they may be in California, they may be in New York, they're across the entire globe, but nonetheless, there's still a heavy centric guest and topics centered around the Tampa Bay community. And so, if you're involved in any type of developments in the Tampa Bay region or even across the country, please consider me your resource for commercial real estate. Still able to do foreclosed properties. Residential is something I've always referred out. It seems like so many people want to get into real estate, but it's such a crowded space. And so how do you survive in real estate? That's what I want to kind of close out with here on this segment of the program. So a lot of people don't jump right into commercial real estate. It's something that they evolve into after either going to school for it or being in business, with a developer to some degree. Very rarely do people just get a real estate license and jump right into commercial real estate. It's something that you oftentimes will ascend to or will have went to school for. But how do you get into real estate? How do you survive in the business? And, I always tell people, after you get your real estate license, you're going to come out of the real estate school and you're not going to know what to do. You're not going to have any training. You're not going to know how to act as a real estate professional. And so it's very important to join at that point, a very large brokerage, or unless you have somebody who's going to mentor you in the business. So because the large brokerages have the educational platforms that will then carry your education on past the real estate school. And so that's very important. They teach you the basics of the contracts and the addendums, the listing presentations, how to follow up with people, how to build a database, how to do all of that different type of stuff. What real estate school teaches you are the different laws. It's really, you come out of there with a degree in real estate law, but you're not going to be applying that to a traditional transaction. You're not going to be explaining the Fair Housing Act to people when they call you to buy real estate. Now, if they start talking along racial lines, you might have to explain that to them, but those are not conversations that are normally going to come up. And then the Fair Credit Reporting Act and all these different things associated with law is what they teach you in real estate school. So it's important when you come out of real estate school, if you don't have a mentor that's going to mentor you, go into a large brokerage. The small brokerages, the broker will tell you they're going to mentor you. They may or they may not. Just be cautious that all the brokers out there are in the business of recruiting agents. They don't make money unless you sell a piece of property. Therefore, it's in their best interest to recruit as many agents as possible, because a certain percentage of them, and usually the large majority of them, are low producing to no producing agents. And so they're going to promise you the world because they don't have to offer you anything more than a place to hang your license. So go to the large brokerages that have the educational capacity, the educational resources to teach you the business. After that, find an agent in the office that you have joined that is a top producing agent. Go to that agent and tell them that you want as many buyer leads as they're willing to send to you. The top producing agents oftentimes are going to be people that are going to be primarily listing agents, and listing agents get spoiled after they grow their business to a point to where the buyers or the listings outnumber the buyers that they are closing each and every year. Listings generate lots of buyer calls, but again, like I said, listing agents begin to get spoiled and they don't want to work buyers. Why is that? Well, because one, buyers are finicky in the business and there's nothing to tie them down to any particular transaction. A listing gives you a contract and locks you in to an agreement for up to, typically 6 months, and they can't cheat on you and they can't leave you and go with another agent. They can cancel if you don't perform, but it's a discussion that they have to have with you. They can't just all of a sudden list it with another brokerage. Buyers, on the other hand, behave in a completely different manner. A buyer can call an agent one day, you take them out, you show them properties, and then next weekend they call a different agent and they go out with that agent. Now, a good buyer agent will lock them down with a buyer brokerage agreement, but those, at least in Tampa Bay's market, are extremely difficult to get signed by buyers because the buyers are under no advantage by having a buyer agent locked in to their ability to perform. So buyers are welcome to go to any brokerage, any listing they want, and oftentimes will use certain agents to drive them around and then only to call somebody else or a listing agent and buy the home directly from them. They don't mean any harm by it. They just don't understand how real estate works. They assume that the buyer's agent that is driving them around, I guess, is getting paid, but in actuality, they're not getting paid unless they close a property that you have purchased, and you're costing them money by having them drive around in the car and spend time with you. So, this is where I say be mindful both as a consumer, but also to the realtors, which is what, I'm gearing this conversation towards. So when you begin to develop yourself as a real estate agent, you're going to get the buyer leads from a listing agent, and you're going to want to vet the buyers that you work with. If you don't vet them, you're going to frustrate yourself out of the business. And that to me is one of the biggest reasons why real estate agents fail in this business. So one, they're not prepared to treat the business as a profession and as a job. And number two, they end up chasing these buyers around that are unqualified and uncommitted to even, themselves. And so like I said, the realtors end up frustrating themselves out of the business, and they quickly burn up any capital that they had saved for that business. Now, I said 6 months to become sufficient in real estate. You're supposed to have 6 months of capital or reserves saved up, but that's for people that are very slow to catch on to the business. There's no reason why you can't begin making real estate commissions within the first 60 days. You got to allow for at least 30 days to get a deal, and then 30 days to close those first deals. But if you begin treating the business or treating the real estate business like a job, showing up, making the calls, taking the leads, and taking whatever that you can get, you can establish yourself as a real estate agent. So again, you want to go to the listing agents and you want to get their leads. And so you've got to find somebody who's willing to, basically be a team player with you. And don't be surprised when they ask for a referral fee. It's one thing you got to be familiar with in the business. It's common in Tampa Bay to pay a 25% referral fee to an agent who gives you the lead. You can do the same thing when you begin to source your own leads, and it becomes residual or passive income when you start to develop an excess of business. So don't be shy about paying referral fees when you enter the business. Real estate commissions oftentimes number in the thousands as it is anyways. And so again, when people are willing to give you the business, don't turn that down. Because if you go out and source your own business, you're going to be paying marketing fees. You're going to be paying a cost that's equal to 25% of the lead that you generated, over the time anyways. So again, be willing and expect to pay at least a 25% referral fee from these agents. Then you want to then develop a certain segment of the community to where you begin to market yourself on and present yourself as that community expert. Unless you're going to go into a niche, which is what I did with foreclosures, you want to become a community expert. You want to become a neighborhood specialist of some sort to where you can begin to source listings, because listings are what sustained real estate business for people. If you're going to be a buyer's agent and never pick up listings, it's going to be very difficult to build a long-lasting career. And a lot of agents begin to get frustrated with buyers and they don't want to work with buyers. So the key to sustainability in real estate is your ability to get real estate listings. From that, you can have opportunities to earn double the commission, because you can get the buy side of the commission plus the listing side of the commission. Buyer's agents are just able to get the buyer side of the commission. They don't listing it, so they're not entitled to that side of the commission. Plus, you get buyer leads off of your listings, and you can put marketing in place to generate even more and more buyer leads, or you can refer them out at 25% referral fees or more. I mean, referral fee is negotiable. I would just say 25% is typical and standard in the Tampa Bay market. But real estate listings are the key to sustainability in the real estate business. So again, I just want to keep you informed on what it is to be a real estate agent. A lot of great topics on this program. You can find them all available on our iTunes podcast, available on demand. Also at Tampa Bay Radio or TampaBayREO.com. Also, new episodes of the program air each weekday morning, 9 a.m. Eastern Standard Time, and new episodes of the regular program also Monday through Friday. So please subscribe to us on iTunes, leave a review, and also find us on our YouTube channel at thatyoutubechannel.com. If you'd like to come onto the program, we're always looking for guests. We're always looking for information and content. Visit tbsinterview.com for more information. And be sure to tune in again next week, 9 a.m. Eastern Standard Time, to That Business Show, the Real Estate Edition, where real estate becomes show business.